Hi, I am Anna. I come from www.ntvforex.com. The dollar has left the building. Analysis http ntvforex.com news ID 7EFE988192024 29:24 AM. The US dollar left the building overnight, with barely an Elvis-esque "thank you very much, you've been a wonderful audience, ahoy." Despite a heavyweight 20-year US bond auction due today, yields continued tracking lower across the long end of the curve. That was all the Q markets needed to put the greenback to the sword, something the technical picture had been hinting at for the past few days. After a temporary scare last week, financial markets have finally listened to me and realized that the US government could issue as much debt as it wants. The Federal Reserve will ensure that yields are going nowhere. For every reaction, there's another one somewhere else. Pure physics doesn't world in the financial markets universe, along with many other things. In this case, when confronted with QE-driven currency debasement and a 0% world, that was the US dollar. Money headed for the door seeking better opportunity elsewhere. Equities rallied, led by tech, of course. Precious metals and base metals rose, with G10 and developing market currencies following suit. With the US dollar bear market leading the way, there appears no apparent barrier to the mother of all FOMO trades continuing short of aggressive mass COVID-19 related lockdowns reappearing in the United States. Even the fiscal stimulus standoff on Capitol Hill appears to be becoming second-tier news, although its negative impact on future US data is inevitable. In Asia today, Japan machinery orders for July fell by a higher than expected 22.5% YoY. That follows weak GDP data earlier this week reflecting the impact of COVID-19 on a very export-facing economy. However, Japan's woes are a known, and thus, will not materially affect sentiment. The Bank of Indonesia (BOI) will announce its latest rate decision this afternoon, with Indonesia threading a fine line and having the dubious honor of owning Asia's worst-performing currency. Having paid the price of partly monetizing government debt earlier this year and failing to remotely get on top of its COVID-19 outbreak with most of Jakarta now a red zone, the BOI is threading a fine line. To support foreign investment and the currency, the BOI will pause its easing cycle. More attention will be paid to the post-announcement comments. Any hints of further debt monetization, or further rate cuts, will leave the Indonesian rupiah even more unloved than it has been to date. Both Britain and the Eurozone release inflation data this afternoon. A surprise to the downside of expectations will put negative rates back on the table for the UK, and the possibility of more easing from the ECB. The impact on the euro and pound will be minimal though, as the moves seen overnight and over the past months are a dollar move driven by collapsing yield differentials. China announces its loan prime rate decisions tomorrow morning. Again, the PBOC is very unlikely to cut, being reluctant to stoke more bubbles in the economy. It will content itself with outsized MLF liquidity measure launched earlier in the week, part of a trend of directing stimulus to exactly where it is needed in the economy, rather than a one-size-fits-all approach of the past. NBSP Asian equities follow Wall Street gently higher. The S&P 500 and Nasdaq made new record highs overnight, led by big tech naturally, and strong quarterly results from big box retailers. When all was said and done though, the gains were modest in scope, with both indices creeping into new highs, not exploding higher. Part of that tentativeness may be the fall in the US dollar, and the continuing stimulus standoff on Capitol Hill, with investors worried that Q2 might end up being the best of a bad bunch. The S&P 500 rose 0.23%, the Nasdaq rose 0.73%, led by gains in Amazon, but the Dow Jones edged lower by 0.24%, weighed down by a fall in banking stocks. Despite the buy everything, FOMO exuberance sweeping the markets, further gains from here will probably be more of a slow grind higher than a sprint. Nevertheless, the foundations of the most counterintuitive rally in history remain firmly in place. Hong Kong is closed until midday due to a typhoon, but elsewhere, Asian markets have mostly followed Wall Street higher in a modest fashion. The Nikkei 225 has climbed 0.25%, with the Kospi up 0.55%. Potential trade tensions are weighing on Chinese stocks initially after more Trump rhetoric overnight. The Shanghai Composite and CSI 300 are down 0.40%. Across Asia, the Singapore, Jakarta, and Kuala Lumpur are flat. Taiwan is up 0.25%, with Australia's All Ordinaries and ASX 200 both 0.90% higher. Trade concerns between the US and China appear to be hanging more heavily with Asia, as is the general appreciation of their currencies overnight versus the US dollar. The fall in the US dollar is likely to mute gains in Europe this afternoon, at least initially. However, the search for yield and hopes of a global recovery should ensure European and Asian continue to follow their Wall Street counterparts to some extent. The US dollar goes down for an 8-count. All attention was on the US dollar overnight, which entered a general strategic retreat on currency markets. The greenback broke many important supports in the G10 space, which has led the dollar rout this year, signaling more losses lie ahead. The dollar index of developed currencies fell 0.55% to 93.32, carving through support at 92.50, which now becomes resistance. It is a decisive break and signals further losses to the 91.00 regions initially. The EUR-USD rose through resistance at January 1920, gaining 0.50% on the session. The single currency now targets further gains to the 1.2200 regions. Having led the US dollar sell-off this year, it is essential that the euro now remains above January 1900. The British pound outperformed, breaching 1.3200 on its way to a 1.0% gain to 1.3245. Sterling now targets its December 2019 high around 1.3500 in the first instance. Brexit talks with the EU this week could act as a temporary brake on the rally. USD JPY, having traced out a triple top just above 107.00 just a few days ago, eased further overnight to 105.50. With its RSI nowhere near oversold, it has the room to move lower still, initially targeting 105.00 followed by its July low at 104.20. Regional Asian currencies also moved higher, but less aggressively than the moves seen by the G10 space. That likely reflects continued nerves over US-China relations and their more actively managed nature by their respective central banks. Most of the region run various forms of dirty pegs, and being so universally export-reliant, no one wants to let the currency appreciate too far ahead of their regional compatriots. Think of it as a form of currency NIMBYism. NBSP regional Asian currencies will continue to appreciate against the dollar. Possible exceptions being the Indonesian rupiah and the Indian rupee, which face individual challenges. One positive of the dollar weakness being that regional central banks now have more room to ease monetary policy if necessary. We should, though, expect an orderly march higher by Asian currencies in lockstep with their regional contemporaries, not a free-for-all gold rush. The US dollar has broken significant support levels across the currency spectrum now. With US yields set to remain capped ad infinitum by the Federal Reserve, the market is poised to enter another structural medium-term downward move for the US dollar. And then there was oil. One corner of the markets that did not gain any love from the weaker greenback was oil markets. Both Brent crude and WTI fell modestly overnight, despite US API crude inventories printing another massive 4.5 million barrel fall. NBSP Brent crude fell 0.60% to $44.95 a barrel, and WTI fell 0.50% to $42.50 a barrel. Both contracts have reclaimed those losses in Asia today, rising to $45.20 and $42.70 a barrel. The appreciation of Asian currencies flushing buyers out of the woodwork for dollar price black gold. Oil markets likely have one eye on the OPEC ministerial meeting today, which may be tempering bullish tendencies, although we expect no surprises. The contango in the Brent futures curve is the likely performance for oil's reluctant to lock in further gains. It suggests that spot supplies are plentiful, and oil will struggle to move higher until the curve narrows. Oil was an early mover in the V-shaped, buy everything, FOMO trade. With a lot of low-hanging fruit priced into oil prices, and with OPEC gradually easing production cuts, oil will need more than just a weaker US dollar to inspire further material price gains. Gold's sell-off consigned to history. Gold's emotional correction lower appears to be over as quickly as it began. Lower US yields and a much weaker US dollar internationally helped power gold to 0.85% gain overnight. It reclaimed the $2,000 an ounce mark on its way to closing at $2,001.50 an ounce. NBSP gold has retreated modestly today, falling to $1,995 an ounce, with fast money taking short-term profits, and liquidity reduced by Hong Kong's typhoon-induced absence from the morning session. Nevertheless, gold looks to be a buy on dips to the overnight low at $1,977 an ounce, as the drivers powering gold's underlying rally return with a hiss and a roar. The overnight high at $2,015 an ounce forms intraday resistance, and assuming the dollar continues to underperform, I see no reason why gold will not test this level later today. And finally, NBSP, the Asian musings of the voice of reason, takes a break from today. I will be taking a socially distanced road trip to the historic city Yogyakarta to celebrate Mrs. Halia's birthday. I hope she wanted an Apple Watch like Elvis. I am leaving the building, but I shall return to Jakarta for a new Vegas season next Thursday. After a socially responsible swab is stuck down the back of my nasal passage, that is. Thank you very much, you have been a wonderful audience, Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.